So in all honesty, would you rather have a fully secure and comfortable wage of, say, €3,000 a month, guaranteed until you retire? Or would you do away with that guarantee in order to get a slightly higher wage of, say, €3,150, knowing perfectly well that you could fall back to zero, potentially even forever, the moment you become incapacitated to continue working due to, for example, illness or accident? Most people are hopefully going to agree with me that there's more than enough conceivable scenarios in which it's just not possible to continue working. Nonetheless, in Germany, 2/3 of people are actually in the second model, without proper income protection. And for us expats, it's possibly more than 9 out of 10 people who remain exposed to the dangers of a complete loss of income, oftentimes without even being aware of it. And because I honestly don't think that's a very healthy position to be in for anyone, but especially if you have a family or if you're still quite young, for example, and simply don't have the means to bridge a longer period without any income, this video is going to be all about understanding income protection in Germany. I'm going to explain how the system works, how you're covered, but also mostly not, and what you can do to prevent a medical issue from becoming a financial one on top, be it in the short, the medium, or the long term. Hi, I'm Max, the insurance guide for expats. My content's tailored specifically for expats and in a couple of different languages so that the incredibly complicated and at the same time to many people also very boring, but nevertheless super important subject, insurance, is rendered in a way that's hopefully relatable and understandable. See, even though the official position towards the insurance I'll be covering in this video is that it's an absolute must-have, the very fact that it's not a mandatory insurance leaves room for people to speculate, spread misinformation, and oftentimes even doubt its relevance. Maybe not unlike the topic of health insurance in the US. In Europe, or anywhere else where health insurance is mandatory, it's more or less universally regarded as one of the higher goods of a functioning, healthy society. In the US, on the other hand, where health insurance isn't generally mandatory, opinions are split into multiple camps, and you'll find plenty of examples of wrong or misleading information that's circulating. Alright, enough said, let's talk insurance. I'll be covering income protection by means of an occupational disability insurance, better known in German as Berufsunfähigkeitsversicherung. And because that word's so long, most people choose its abbreviation, BU. In this video, that's also the abbreviation I'll be using most of the time. Look, in my view, it's actually quite simple. This is the insurance, my friends, that makes the biggest difference when it really, really matters. We all know that life's a ride and it's got many ups and downs, and when the roller coaster starts making the wildest loopings, I just want to know that I'm buckled up. The BU in that comparison is a kind of seatbelt. It just makes sure that, at least financially speaking, you can remain seated while being tossed around from a medical point of view. And don't get me wrong, I'm actually someone who quite likes to take risks. I travelled around the world for years. I've seen and done some crazy excuse my English, some crazy stuff. And I also don't shy speculating on the stock market or with crypto, for example. But those, to me, are calculated risks. On the other hand, potentially having to forego most of the little pleasures in life, give up on some of my life dreams and having to depend on others, or, worst case, losing much or most of my freedom because I'm unable to generate an income of my own, well, that I consider a scenario that's absolutely not acceptable to me, and which I want to avoid at all costs, which, fortunately, is possible by means of a BU. So what exactly does an occupational disability insurance, a BU, do? It's actually quite simple. A BU replaces your income if you're unable to work. So if you become incapacitated at least 50% due to illness or accident for 6 months or more, you're entitled to 100% of the agreed monthly payment from your insurance, say €3,000, and this for as long as you remain at least 50% incapacitated to work, and up to your 67th, because that's currently the retirement age in Germany. As soon as it's foreseeable that you won't be able to work more than half of what you used to, you get the insurance money, retrospectively. That means from day one. It really also doesn't have to be anything too serious. The whole point of the insurance is to catch the drop of income, if there is one. Let's take this example. You do a desk job and suddenly, due to neck or back problems, you can only work 20 hours or less of the full 40. The insurance company will then pay 100%, so not 50, 100% of the agreed benefit. And yes, in this optimistic scenario, obviously, the person in question effectively earns more after their partial disability than before. And even though it does matter what you do professionally when you take out the insurance, as it influences the price. Once you have the insurance, you're protected, whatever you do. And it's completely irrelevant if or how many times you change profession. That one question that determines whether you can claim money off of the insurance is, are you at least 50% incapacitated in what you were doing now, or well, before the incapacity? If the answer is yes, then you are entitled to the full monthly benefit until you no longer qualify for the definition. And fun fact, even being a student or a stay-at-home mum or dad is considered a job under this insurance, with the logical conclusion that if you have a BITL and you are suddenly unable to perform at least 50% of the household or parenting-related tasks due to illness, for example, you're entitled to the full benefit as well. When the kids are out of the house, that same contract now protects you from loss of income in your new job, irrespectively of whether that's the same job as before or a completely different one. So why did I say earlier that I consider the BITL to be a kind of safety belt? Well, the thing is, most people pay their rent and their bills with the income from their work, so from their wages. And if their ability to work is reduced or it falls away completely, in most cases there's only limited savings to bridge that gap. And usually that's not a huge problem if this situation continues for only a few days or weeks. On the other hand, I know very few people who've saved so much that they can draw on it for months, let alone years. Not to mention the fact that those savings, of course, weren't meant to cover daily expenses with. Moreover, let's not forget that your income now is literally at the source of your standard of living on 3 levels at the same time: today, tomorrow, and the day after tomorrow. Today, your income covers your rent, your favourite food, leisure activities, trips, clothes, or insurances, for example. Simultaneously, that same pay is also behind tomorrow's rewards. Investments in the bank, for example, or targeted savings to buy a big holiday, a car, or say a new property later on. Or the children's piggy banks are also a good example, I think. On a third and final level, we obviously need to save now in order to pay ourselves a salary later. In the end, our pension is simply that part of our wages today that's deliberately saved from immediate consumption so that we can pay ourselves those wages back when we're not actively working anymore and thus not earning a job salary any longer. So one source of income, or at least for most, the main source, which at the same time determines your standard of living and that of your children on all 3 levels. If you find yourself in a situation where you can no longer generate an income, be it for 6 months, for 10 years, or even permanently, the BITL kicks in and keeps you afloat. And that, of course, is why every financial planning pyramid literally has asset protection at the very first level. Insurance, in other words. The most important of which is income protection insurance, which is what our BITL here in Germany does best. What I very often hear during counselling sessions is something along the lines of, "Yeah, Max, but I'm paying so much social contributions already, and to be fair, Germany's also known internationally as a kind of social paradise. Surely I must be protected by the state somehow." And then I answer something along the lines of, "Well, you're right, both statements are actually true. Contributions have never been higher than in 2025. And they're still on the rise due to the ageing demographics. And Germany can certainly also be considered a country with good social safety nets. Mind you, though, safety nets. They're there to prevent people from falling completely to the ground, financially speaking. They have nothing and utterly nothing to do with protecting or preserving your quality of life, your standard of living, either now or on the long term. Look, if you're an employee in Germany and you're a member of the statutory health insurance, which is actually the case for the vast majority of people, you're entitled only to your full net salary for just over a month when you fall ill. After that, if you're still unable to work, your health insurance kicks in with the so-called Krankengeld, and that's roughly 75% of your previous net wage. So with a salary of, say, 3,000 euros net, that means a loss of around 750 euros in the household budget. And because of my job, I get to assess the financial situation of individuals and families every day, and I can tell you, a minority of people have 750 euros left after all expenses at the end of any regular month. In other words, many already rely on their savings at this point in time, at this stage. Now, suppose it's not medically possible in the medium or long term to go back to work. Not only is it quite conceivable that something more serious is going on, this is the point where also financially things can get really icky. And that's because those 75% I just mentioned, they have a maximum payout duration of 1.5 years. After that, statutory pension insurance takes over, and they will then determine how many hours they can make you work in any position. So that could be also at the cash register or on the phone somewhere. Depending on their inquiries, you could then get a so-called Erwerbsminderungsrente, or even just half the Erwerbsminderungsrente. On average, we're talking about 1,000 or even just 500 euros per month that people can expect. And oh yes, if you've not yet made 5 years of compulsory contributions to the pension fund, which is obviously the case for many expats, especially in the beginning, then forget what I just said about the Erwerbsminderungsrente, because in that case, you're not entitled yet. Remember as well, we're talking about employees here. If you're your own employer, the mechanisms in place are oftentimes either greatly reduced or not existent at all. And that's why the Netherlands, as a wonderful example to other countries, will very likely make the BU, or its equivalent in the Netherlands, compulsory for self-employed people by the year 2027. To be clear, I don't wish to scare anyone here. I do want to do away with ignorance. In German, there's this saying, Unwissenheit schützt vor Strafe nicht. In other words, just because you didn't know something doesn't mean you don't bear the full consequences. The awareness I want to raise above all is that an incapacity to work, or even just a partial one, can cause serious financial strain in Germany, already on the short term. And those who rely solely on the social system and who do not have enough reserves on their own will, in the medium or the long term, inevitably fall back onto the existential bare minimum. So how much reserves am I talking about here? In other words, how much money would I have to have in order for me not to need an insurance? Of course, I don't have a general answer to that kind of question. The BU ultimately ensures the residual value of your workforce, your labour, and you can calculate this value relatively easily by multiplying your current income by the number of months you've got left to work before retirement. Take this, for example. If at age 30 you earn the 2024 average German gross salary of 4,187 euros, the total value of your working power calculated over 37 years until the German retirement age of 67 and adjusted for 2% inflation per year is worth more than 2.7 million euros. And that's without taking into account wage increases over the years. So someone who becomes incapacitated at age 30, for example, for instance, after a stroke, if that person had insured those 4,187 euros from the example, well, they could count on 2.7 million euros from the insurance company. And even if, over the years, he or she gradually regains some capacity to resume working, as long as the incapacity to work remains at 50% or more, they will continue to receive the full payment from the insurance company, 2.7 million, to have or not to have. So the answer to the question of how much money you need to cope with occupational disability yourself, let's just agree, a lot. And by the way, let's also not forget, if you no longer receive a gross salary, who's contributing into the statutory pension insurance? Exactly, no one, right? So your retirement must therefore continue to be financed in full by means of the monthly insurance benefits from your Berufsunfähigkeitsversicherung. Let's be clear about one thing. It's absolutely not about the numbers here. It's about what's emotionally connected to the money for each and every one of us. Because at best, the BU or BU benefits are nothing more than the recovery of funds, and therefore the recovery of quality of life that we'd actually all counted on. So is this me implying that money's everything and that without it we cannot live a full and happy life? Absolutely not. Happiness, my friends, comes from within. But having the freedom to decide where and how we want to live, what to fill our fridge and cupboards with, how to organise our free time, where we go on holiday, and what gifts we can give to our children, the way I see it, that's quality of life too. Quality of life that I personally definitely wouldn't want to do without. For those who've understood how serious the consequences of occupational disability can be and how limited the state's protection is, well, for them it will hardly come as a surprise that the Verbraucherzentrale, so the German Consumer Association, ranks the BU as one of the 3 utmost important insurances, along with health insurance and private liability insurance. Health insurance is fortunately compulsory, and for that reason, almost everyone's got one. According to the GDV, however, only 83% of households and 73% of singles have liability insurance. And that, my friends, is a deficit of 17 or 27% respectively, because a liability claim can amount to several thousands or even millions of euros. So what about the BU, the third existential insurance about which, as I said, all consumer agencies actually agree that everyone needs it? Well, we hit 63%, but unfortunately on the wrong side of statistics. About 63% of the working population over 15 in Germany has no Berufsunfähigkeitsversicherung. Obviously, as an independent insurance broker, I did ask myself how on earth that's possible. And apart from the fact that, unfortunately, the insurance is still not mandatory in Germany, I see a couple of factors at play why the numbers are so low. The main reason seems to me to be a lack of awareness regarding the financial consequences of occupational disability. And by making these videos, I hope to make my very small contribution to raise a little bit of awareness about a topic as important as this one. Reason number 2, I see in the fact that, from my job experience, I have to conclude time and again that for most people, an incapacity to work is something almost surreal, something that is in fact almost impossible to happen to them. And that's, as understandable as it may be, also a bit disturbing. Here are the official statistics from Statista.de from last year. Everyone actually faces odds of about 40% that they'll become occupationally disabled at least once during their career. Knowing that the average disability lasts 6 to 7 years, I think we're very far away from any unthinkable scenario. If the statistics are so clear, why is it that so many people, and especially young people, so incredibly underestimate the likelihood of losing their ability to work? My personal hypothesis is that people in their 20s and 30s usually simply haven't had enough health issues to envision them becoming unable to work, or partially unable to work. See, if we disregard our years as a baby, on average, and if there's no innate health issues, more than 95% of all lifetime medical costs are made after we turn 30. If we now look at the causes why people do become incapacitated to work, I think we can agree that diseases such as a burnout or depressions, cancer, a stroke, musculoskeletal diseases, heart disease, etc. are much more common later in life. Besides, people with office jobs are actually not necessarily less affected, in particular psychological problems, and that's cause number 1 of occupational disability, by far, are much more common actually among people who sit still all day than among those who are physically more active. Okay, and now I've come to a very important point of the video, and that's a super important takeaway that I would summarise as follows. You can't insure a house that's already on fire. If your house is already smoking or burning, by which I mean that certain health issues are already there or rearing up, getting a BUL will either be possible at a higher rate, possible without coverage for the medical issue that's already at hand, or, worst case, insurance companies will deny your insurability altogether. Therefore, it's essential to take out a BUL as early as possible. From my experience, I can tell you that about half of people over 30 can no longer get a normal BUL, so no contract without a surcharge and or an exclusion. And did you know that there's literally only advantages linked to taking out the insurance early? Firstly, you're logically insured for longer. And yes, although the likelihood of someone becoming incapacitated at a younger age is lower, at the same time, the potential financial damage of a long-term incapacity is, of course, a lot greater, as there are many more years to bridge until retirement age. Secondly, it's actually hardly cheaper if you insure yourself later, and that's due to the fact that, to put it somewhat simplistically, an insurance company puts a price tag on the product, more or less independently of the duration of the contract. So, for example, someone who takes out a BUL at 20 will pay much less at 30 than someone with the same profile who does not take out the insurance until 30. In the end, they'll both pay about the same amount for their insurance, with the huge difference that the person who started later will have been at risk for 10 whole years. And, moreover, and now we've come to the third and last argument, the person who starts later obviously has a much bigger risk of getting a normal contract because he or she might have received treatment a few times for all sorts of things in the meantime. Let's also not forget, you cannot insure a house that's already on fire. So, the longer you wait, the greater the chance you won't be able to get the insurance. Alright, having talked a lot for orientation, we were talking about the reasons why more than 60% of people don't have occupational disability insurance in Germany, despite the high risks we saw earlier. The first reason was a lack of awareness that the German state offers hardly any protection. The second reason had to do with the fact that young people in particular seriously underestimate how realistic their risk of becoming incapacitated is, and that, in fact, no one, of course, is immune to certain mental illnesses, to cancer, strokes, a serious accident, or other serious diseases. Let's move on to reason number 3, and for many, that's the price, of course. How much you pay for the insurance depends on your age, as we've seen, on your health condition, the specific tariff itself, and also on your profession at the time you take out the insurance. If you have a certain craft, or you literally work with your hands a lot, like in construction, for example, or if you do something that involves taking care of people, like nursing, yes, then unfortunately you're actually in a category of jobs for which a BUL can get really expensive. For those people, however, I have another more fitting insurance solution in store. I said before that the BUL also gets more expensive the older you are when you take it out. If we take a 30-year-old as an example, which is actually also very close to the average age at which the insurance is taken out, most people can insure €1,000 for between 30 and 60 euros a month. If you then want to insure your wage of, say, €3,000, for example, you'll be paying between 90 and 180 euros a month. I mean, if you then know that the insurance company's risk at that moment to insure those €3,000 is about €2 million, let's say if that 30-year-old were to become incapacitated immediately, for example, after a stroke, well then €90 suddenly doesn't sound all that expensive anymore, does it? And remember, the full benefits are paid out from 50% disability. All of a sudden, those €90 almost start to sound like a bargain. But yes, of course, I get it, based purely on the fact that 80, 100, or even €120 a month go towards an insurance you don't know if you'll ever need it. I understand that's a lot of money. And as with anything, I think the question we need to ask ourselves is it worth it? Considering that occupational disability insurance is actually equivalent to a guarantee that you can implement your life plans and dreams on all 3 levels, no matter what, I personally think that's a no-brainer. A bit all is, in that regard, a lot like insuring yourself. If you have the funds to invest, to raise your children, or to own and insure a car, I think it makes all the sense in the world to start by insuring oneself first. Or where are the funds for the car insurance, the children, or your investments going to come from, if not either from your salary or from the insurance that's substituting your salary in case of occupational disability? The fourth and also last reason I'm going to discuss why people do not take out a BU is simply the complexity of the whole thing. Berufsunfähigkeitsversicherung. Apart from being a mouthful and having to filter out all the utterly confusing disinformation out there, you obviously need to understand that beast and then also take the time to eventually fill in an insurance application which, even if you spoke perfect German, you probably only understand partially because of the legal language and the jargon. Those are, in my opinion, the ideal conditions for putting off getting insurance forever. I get that, honestly, completely. And now, drum rolls, this is where I come into the picture. You see, there are intermediaries out there who can help. Preferably, I'd say independent ones, such as brokers. Independent in this context means that they're not tied or linked to a specific company, which means that they have access to round about all tariffs on the market. Moreover, there's an incredibly big difference between a representative and a broker. The representative, which you're going to find in an office of a particular insurance company, for example, works for the company and represents, also legally, the company's interests. The legal status of a broker, however, is that he or she is on the client's side and has to ensure that the client's insurance policies are actually tailored to both the needs and the specific preferences of that client. And that's not a small difference, that's a huge difference. And the best of all is, working with a broker literally doesn't cost you a penny. What do you mean? It doesn't cost me anything. No, it doesn't cost you anything. The insurance industry needs brokers like us to survive. We're the bridge between the company and the broker, so to speak. And for that reason, products taken out without our help are actually not cheaper at all. The companies would, if they did that, only be hurting themselves this way. When an insurance is taken out with our help, we brokers are paid by the companies themselves, and that creates a win-win-win situation. The companies have more customers, the brokers have their job, and the customer, next to being insured of course, can benefit from the expertise of someone who really knows his stuff, and thus avoids the main reason why people don't see any money after an insurance claim, and that's because of mistakes, mainly in the insurance application. When you consult a broker and in the end you don't take out anything because either you're not convinced or because it's simply not possible to take anything out because of your medical history, for example, well, that would mean that there are literally no costs involved for you. Alright, I think it's time to slowly come to a close. To summarise, I can only say that insuring your income with the help of a BU is definitely not a luxury. Quite the contrary. I think if people were more aware of what would happen to them and possibly their families financially, and therefore also emotionally in most cases of occupational disability, many more people would probably make the logical choice of protecting themselves against that risk. I oftentimes get asked what the best time is to take out a BU. I usually say yesterday, obviously, but all kidding aside, it's actually possible for children as young as 10 to get the insurance through usually their parents. And that's a special contract that grows along with the kid, so to speak. Moreover, and this is a kind of secret tip, there's a specific insurance for babies that actually guarantees them the possibility of turning the policy into a full-fledged disability insurance later on. If you don't know what to give your child as a present next Christmas, in my humble and obviously also completely unbiased opinion, no, but I'm actually quite serious about this one, this is actually one of the most valuable gifts that you can give your child or young adult. Finally, as a nice little cherry on the pie, I've got some great news with regards to the BU, because it's literally just become cheaper for everybody. And that's because the so-called Höchstrechnungszins, and that's a kind of maximum interest rate that the insurance companies are allowed to use for their calculations, just rose from 0.25 to 1%. In other words, we can insure a larger amount for less money. In any case, I hope I've been able to show you how important it is to insure your income in Germany. If you've been playing with the idea of finding out what the possibilities are for you, or in case you actually wanted to take out some kind of disability insurance all along, then feel free to send me a message with a question or to find a slot for a free consultation. I'm more than happy to show you what your options are without any kind of obligation or time pressure. It's my goal that you understand the insurances you have in Germany, and in general, that expats here get the explanation and the service that I think they absolutely deserve and need in order for them to make the right insurance choices. Thanks for watching, and see you next time. Your Max for Sure.